Why, should I invest? Why wouldn't I want to invest in somebody who's more silently pursuing real investments and doesn't want to talk too much about what they do and how they make money? I would rather invest with those people, right, than with folks who are, you know, promoting themselves on TV all the time.
So at Intel over Nvidia, Jensen Huang's out all
No,
over
no,
the
no, I'm
world.
not
Look, I'm
saying
saying
that.
like he's out
I
promoting
would
AI
never
all the time.
I would never invest in Intel. No, never.
Not for fundamental reasons. Like we're not going to break down why you wouldn't invest in that. I'm just saying like the CEO of Intel, she doesn't. They just changed over. They're not out really promoting anything, but you see Jetson all around the globe all the time. So
Yes, yes,
that's where I'm going with that. As
right, right.
you see the
Yeah,
people who are
you
always
have
out
to.
promoting something.
So from my perspective, the fact that Jensen Huang is out there promoting his company and talking about AI all the time and him out there in his leather jacket all the time talking about things. I mean, he's creating this image and he's really been promoting Nvidia. But if you see what Nvidia's done for the last, I don't know, the
3
last time I
years.
looked, 9 months, it hasn't really done too well, right? I mean, it was soaring for a while. And then lately it hasn't been doing too well. And there have been many better technology stocks to invest in than Nvidia. So
True. I think Intel's actually done better than Nvidia. But I'm just in that time frame you're mentioning. But yeah, I was just mentioning it maybe for the big space versus the little space.
yeah, Intel is in sort of traditional pre-AI semiconductor spaces, and
Cisco.
yeah, and that's not where the action is.
Well, I mean, maybe that's where the action is going this year. It seems to be a rotation now, and not just Intel in particular. We're not, once again, not making particular investments. We're just showing like technically people think of Intel as like old technology and Nvidia is new technology. But yeah, you definitely make your own decisions for investments. You mentioned so there is a certain type of person who invests in Bitcoin. They usually or crypto in general. Maybe they're playing, a bunch of parlays, or maybe they're trading in crypto markets. Maybe they're the Robinhood retail investor type. And most people don't even consider these people investors generally, right? They're like, you're not investing, you're just trading. But there are people who bought Bitcoin $4,000 and watched it go up to like $125,000, and now it's like $60,000, and they're still holding it. Those folks are investors, right? They're investing in Bitcoin.
Well, if you define investing as simply buying and holding something, then yeah, it's investing. I'm looking at an exercise machine in my basement. I bought that a long time ago, and I haven't sold that, right? So is that an investment? I don't know. I mean, you can buy a lot of things and hold them for a long time. That doesn't make them investments.
Maybe. I mean, with your bike, that it would be an investment if you used it, right? Like it's still there. I don't know if it's a Peloton bike, it probably hasn't gained any value, right? It's one of those, but I don't, it's so that's just. But yeah, I get what you're saying, right? Where are you investing in? Do they know why they're investing in that stuff? I imagine someone bought Bitcoin though at that kind of price. They probably know whatever their theory is.
So,
They'll hold it.
Bitcoin has maybe some characteristics of being a collectible, even though you can't touch it, right? So if it's a collectible, people collect things and they don't necessarily sell them in the future. They buy them and then they hold on to them, right? And I'm sure you've got people out there who say, "Well, I bought, Bitcoin at such and such a price and I'm never going to sell." Right?
Ooh.
And, what is that? I mean, that's just bragging value at this point, right? I mean, if you don't realize actual value until you sell something.
You can get a
And
mortgage. You can get a loan against your securities.
yeah, you could, but I don't know. Can you get a loan against Bitcoin?
I
I
don't
doubt
know.
it.
Maybe if it was one of those ETFs or something that you had if you own it in that. I don't know. I haven't looked
Yeah.
into that. Don't leverage Bitcoin. That's one thing we are going to say. Don't do that for anyone.
Don't leverage anything that has such high price volatility.
Definitely be careful leveraging, man. For those who don't know, Clem, he's a professor over at Georgetown. If someone's to walk in your class, I'd love to you expand on what they would get from that. And also, they have a great podcast with Mr. Stephen Davenport. We actually did an episode earlier with Mr. Stephen, episode 6, if you want to check it out, on options and trading. It's a really good, deep conversation. But yes, just tell us a little bit more about your podcast, your class, just what you're seeing in the world. If I was to walk in right now, if I was to turn on your podcast or sit in the back of your class, what would I get?
Okay, so let's start with the podcast. Steve and I were colleagues together at an investment firm, Wilmington Trust, and we were involved in different areas. I was more fundamental; he was more quantitative, right? And after we both retired from those positions, and we got together and said, "Let's do this podcast." and we're both skeptics. You can tell from what I've been talking about now is, I
Mhm.
tend to have a skeptical attitude, which I think is a smart thing to have, a skeptical attitude. As long as skepticism doesn't prevent you from doing anything, right? You don't wanna be paralyzed, right? And I'm certainly not paralyzed. I find plenty of things to invest in. So yeah, we're both skeptics, and we have this podcast, Skeptic's Guide to Investing, where we talk about issues, and we talk about markets. Sometimes we talk about individual stocks. Sometimes we do, financial literacy. So we have a lot of fun doing it, and we've got a good audience, and we bring on a lot of guests, including you, Marcus. And I think it's been a good experience to do that. So in terms of my teaching, right, one of the throughout my career, which my really long career, which would start off, well, I won't go into my entire career. We don't have enough time for that. But one through line throughout my entire career has been international. So international economics, international business, international finance, international investments, like the whole gamut, right? My alma mater is Georgetown University School of Foreign Service, best international affairs school in the entire country, by the way. Um, and
Nobody.
rated as such, right? And
Oh, cool.
so I teach a class there called Geopolitical Risks in International Business. And what you would learn in that class is, and what my students learn in that class is how individual businesses are impacted by geopolitical risks and how those companies seek to manage those risks. So, what do I mean by geopolitical risks? What first comes to mind is things like war, right? Obviously, war, sabotage, but also includes things like export controls and financial sanctions, investment restrictions, data controls, and social media, disinformation type controls. All of those things are things that affect businesses. So, just to give you sort of an example, TSMC, Taiwan Semiconductor, they are highly concentrated in Taiwan, obviously. They're very expensive chip foundries are concentrated in Taiwan. They're concerned, obviously, about Taiwan Straits risks with China, and so they undertook a diversification program and are building plants in the U.S., Japan, and Germany in order to diversify and also become to get closer to their end markets. So, for example, in Japan and Germany, it's automotive is a large part of their markets. So, TSMC, that's one example. We mentioned Nvidia earlier. Nvidia was subject to export controls, and as far as China is concerned, they can't export their AI chips to China. So that's another case study that I do is Nvidia and chip export controls. You've got some of you might remember when the Nord Stream pipeline was blown up in the Baltic
Mhm.
Sea, purportedly by Ukrainians. And Nord Stream is the Russian pipeline that delivered natural gas to Germany. Well, one of their main buyers of natural gas, the Nord Stream gas, was a German utility called Uniper, and so Uniper immediately got squeezed because it had obligations to deliver natural gas to their industrial clients and utility clients at a certain price, and all of a sudden it had to buy the gas from elsewhere at now a much higher market price. And so, how did that company manage to deal with all of that? Is another one of my case studies. So you get the idea. It's like
Oh, yeah.
how businesses react to geopolitical risks. So it's not your sort of typical business class. On the other hand, it's not your typical geopolitical risk class either because we're not looking at like geopolitical policy, right? Like, what should the US do? What should the EU do? We're not looking at that. We're looking at this squarely through the lens of the companies themselves and how they have to manage these risks.
It's very cool, man. Yeah, international business is something that people really just don't fully grasp, like just the intricacies of it. I mean, earlier, or I guess it was last year in Trump's term when he said, we're just going to start doing bribes, and people are like, "What in the world?" It's like, well, some countries, if you don't come with a bribe, you're not. They're insulted, right? When you come to
Right.
international business, they're insulted if you don't come with a bribe. That's just customary for the, and that's not to get into bribes, whether we should be bribing countries or not. But that's just like you're saying, there's different things in there. And then like if you blow up a Gulf Stream pipeline, I wouldn't have thought about the German company getting it, but people are short and people are making a lot of money. It just shows there's lots of money to be made inside of all these things with people who are just, there's always someone making money and there's always someone losing money, man.
Yeah,
Clem,
and
this is
I think the key to the game is avoiding losing money.
boy and losing money. Yes,
It's
yes.
better to not lose money than it is to to try to chase gains. It's much better to not lose money. That's why I invest in a lot of things, but I also have if I can't, I don't try to invest all my money. If I can't find something that I like, I'll keep it in cash because I want to protect against downturn. My concern is that at some point we are going to have a big downturn in the stock market, and I don't want to fully participate in that downturn. So when I see stocks in my portfolio start to surge, I might put on a limit, sell it at a certain point, or I might have a mental limit in my brain, right?
Mhm.
Where I'm going to sell at a certain point in order to capture those gains and put it into cash, ready to invest in something else. I don't, you know, I don't get that's not trading. Okay. I don't consider that trading. And this, I think traders, operate on a day to day basis. I don't trade.
It's risk management.
It's risk management. Yeah.
Yeah, no, that makes sense. So, and this just popped in my head, like listen to you talk about with your portfolio and your theory on Bitcoin and crypto. Why wouldn't you just short crypto? Why wouldn't you just short it like way out, just short crypto?
Because that's also I mean, crypto, you could have flows back into crypto. Crypto prices are volatile, right? Why do I want that volatility? Whether it's I'm going long or short, why would I want that? So
Just just the speed with which it moves in and out, you would trying
right.
to time that would be hard.
You know, if you think about it, one only has so much brain power. You got other things in life going on. One only has so much brain power. And if you're using your brain power, wastefully, in my opinion, on thinking about things about crypto, you're not using that brain power to analyze things that actually do have long-term value, like stocks, right? So
Got you. And then a question though, so
most stocks anyway.
yeah, I think I saw someone say the other day, if you get like 6.5 out of 10 stocks, right, you'll be all right in your portfolio. So you say in your class and your case study, well, I guess it is case study, but it's a real life current event case study, like with the explosion to the oil when they blew up the pipeline. And I remember this was just a few years ago. They blew up the pipeline. What did gold do, right? Because gold and crypto, you would think at one point they were moving the same. Do you remember how gold's moving? Well, gold was going crazy parabolic anyway. But this was before the gold went crazy. Do you remember what gold did with that? Because that was also, people always say digital gold, which you've broken down why crypto and gold aren't the same. But do you remember what it did when that happened? Because usually when geopolitical risks go up like that, gold rises, right?
So when you're talking about so let's separate out here. So in my class, I talk about individual companies dealing with particular specific risks, right? Now we're if we broaden that out to think about how investment markets in general, right? Asset classes in general respond to geopolitical risk. There are, since there are lots of other demand and supply points that touch prices of gold and silver and stocks and bonds and currencies. It's it's often the case that a geopolitical risk leads to a spike in some prices, drop in other prices, and then it diminishes over time. Additionally, sometimes there is anticipation of a risk shock ahead of the shock itself. And so sometimes prices rise, prices for for risk, less risky assets rises ahead of a shock because it's anticipated
Mhm.
to
Pull
some
forward.
degree, and then those prices will settle down after the shock. So, you might have a geopolitical shock of some kind, and it's not always the case that the day after the shock, gold will go up, or Swiss franc will go up, or Japanese yen, which is often a less considered a less risky currency, that'll go up after the shock as well, because it may be that there were some folks, some traders out there who had anticipated that shock and who had bought beforehand. So I don't have in front of me the numbers for, around, when the invasion took place of, Russia to Ukraine in February, but of 2022. But it was well known that Russian troops were surrounding Ukraine
Mhm.
ahead of that, and that there were negotiations or attempted negotiations or attempted talks. So I think there was, at least for a couple of months beforehand, a rising expectation that there would be an invasion. And so that probably put upward pressure on assets, risk hedging assets ahead of that. And by the time the Nord Stream pipeline blew up, flows through that pipeline had already diminished. That was some months after the invasion, like 6 months, 7 months after the invasion. And so I don't know that had any impact on, like energy markets or whatnot, since flows had already diminished. So I think investors probably were already discounting the possibility of Russian energy going into markets, of continuing to flow into markets, because I think, by then there was every expectation that Russian oil and gas would be sanctioned heavily.
Got you. Yeah, so
It's a hard business to invest solely on geopolitical risks because, like I said, sometimes they're anticipated, sometimes the shocks wear off over time. So it's hard to do that at an overall level. So, if you think
it
about gold, you mentioned gold went hyperbolic, and certainly it did. And, towards the end, it went hyperbolic simply because people were speculating in it, right? They saw it rising and they decided to pile in and fear of missing out, right? FOMO towards the end. But the underlying pressure upwards, the real pressure, the fundamental pressure on gold upwards was mainly due to the fact that China was buying a lot of gold. China's buying a lot of gold and for the reserves and selling off US assets. So replacing US assets with gold. And it's got long-term geopolitical interests in doing that. And that's what's putting pressure upwards on gold prices. But again, I don't know. I mean, I sold when I saw gold prices going down sharply couple Fridays ago. I sold off my considerable gold holding and managed to lose only a week's worth of price appreciation. That's it.
you
And
sold off
and
you sold it off and it went down, like, literally, like, the same day, like, it went
right. I sold well before the closing price that day, and it's been kind of flat since then. So I sold off at a price that's still significantly higher than what the gold price is today. So, and that was just a couple of weeks ago. So will gold start to rise again? We might see some right. It might, right? It might. It's hard to determine, what is the fundamental price of gold. It's hard to say. There is this underlying pressure from the Chinese purchases, so I don't think that's going away. But how much of the current price of gold is because of speculation? Probably a lot.
nice. Yeah, and that goes right back into the gold with the Bitcoin and just the movement, like we said, hyperbolic moves in gold and Bitcoin, which an example people can probably think about, and it's something that I noticed. So obviously, Bitcoin trades 24 hours a day, right? 7 days a week. Think back to when the United States bombed Iran. Once again, we knew we had information that something was probably going to happen. No one really knew when it was going to happen, but it happened on like a Saturday night, if I remember correctly. Bomb it happened, like crypto went down, oil futures went up. Crypto, the 24-hour trade nature of it means that people are usually first in and first out of crypto. Like that they like but by Monday, and the time government has had time to explain their messaging to people, Bitcoin was back to where it began and oil prices came back down. So another thing, so people have to
Yeah, so
also
it
be
doesn't
careful with that.
last. Some of these crises don't have a persistent market impact.
Right. People have to be very careful if they're trying because people try to invest off of those things. Like you said,
Yeah.
they're ahead of it.
Yeah, I think it's dangerous to buy risk on and risk off assets based on what's going on with geopolitics. Unless it's and if it's a really serious thing, right? Or a persistent thing, why invest at all, right? Like one of the things, I know we've been on it for a while now, but one of the things that I don't invest in are Chinese stocks. And I see that there are some really fundamental long-term issues with Chinese stocks. And we can talk about this some other time, Marcus, right? But
Talk all you want.
some of that is geopolitical. Some of that is domestic Chinese political. And so I won't invest in those stocks because of those persistent reasons. It has nothing to do with a shock per se, but I won't invest in it. Maybe my thoughts on China had it. My initial change in views about China, and I used to be a China bull. But my views on China shifted overnight when Jack Ma was detained, the head of Alibaba, back in 2020. And then China started to crack down on internet platforms in China. And then that was it, right? No, I haven't gone back in. If you look at, despite everybody talking about how great a market China is and blah blah blah, people don't talk that much about China being a great market anymore. But as much as people talk about that, if you actually look at investment returns from, say, the China indexes, they're negative over long periods of time. And there are a lot of reasons for that. But I look at that and I look at the political risks there and the US China risks. And I just don't invest in Chinese stocks.
That's a great example of why, some people are always like, maybe I want to invest in this, maybe I will, but you just gave a great example of like, I don't invest in this, and this is the reason why, and this is how geopolitical risks all play into it, man. Main Street should appreciate that. Yeah, we've been talking for a while, but I think we've been giving a lot of value to the listeners, man. I really do. I want to respect your time, so I'll give you a few minutes as we wrap up here. Just if there's anything you want to tell Main Street about crypto or gold or what you think, what you're seeing in the world, where we should be, let them know, Clem.
I think it's very important to be skeptical about potential investment opportunities. I think it's very important to not be misled by promoters, right? If you're hearing a story and it just seems like a story and it seems like it's nonsense, it may very well be nonsense. So use your common sense to approach, potential investment opportunities or any, I don't even want to call them investment. Just apply your common sense in general. Common sense that you apply in day-to-day life should also apply, I should say, to your investing, right? Don't leave your common sense at the door, so to speak, when you're looking at investing, right? Apply the same common sense to that as you would to anything else. I mean, too often people are attracted by shiny objects, right? Would you buy that shiny object if it were in a store, right? Maybe not, right? So don't buy it if it's being offered to you as an investment, right? If you think that the whole premise is nonsense. And I offered you here some reasons to suggest that the whole Bitcoin crypto enterprise is really nonsense being packaged as something that's a real investment.
Yes, thank you. Yeah, that was good, man. As my auntie would say, sense is a common to everyone. Clem, unfortunately, it's sometimes people lack that stuff. They want if someone wants to connect with you or find you, Clem, I'm sure people are going to. I don't know how this is going to be received. It is what it is. Half the world loves crypto, half the world doesn't love crypto. But what you said are facts and statements. So if someone wants to, obviously they can check you out on Skeptics podcast, LinkedIn. Where else could they find you if they want to connect?
Those are the 2, right? I'm
Okay.
not a big social media except for I'm not on any social media other than LinkedIn and, of course, the Skeptic's Guide to Investing, our podcast. The podcast is Steve and I do. But those are the 2. So LinkedIn or that, and I definitely welcome people to join my LinkedIn, and I occasionally write on that LinkedIn as well. Basically anytime something comes up, I don't really force myself to write on LinkedIn, but anytime something comes up that attracts my interest and I think I should opine on, whether it's like Bitcoin or whether it's gold or whether it's even, our crazy domestic politics, I'll write about that too. So anything that's on my mind that I think people should be aware of, I write about. Sometimes I try to take a sort of a humorous approach to it as well.
Yes, yes. That just means that you have a great understanding of what you're writing about. You can put a little humorous tone to it. Man, this has been a really rich conversation. I appreciate you hopping on, Clem. Just so people know, we're here trying to help Main Street meet Wall Street. As bearish as Clem is on crypto, I'm gonna have someone on here who is just as bullish. So don't go trying to bite our heads off. It's going to be equal balanced conversations. You figure it out for yourself with this information. Like I said, use your common sense in what you're going to invest in. Clem, you got anything else you want to tell Main Street before we hop off?
Nope.
Man, I really appreciate you hopping on. This has been a great hour plus conversation. Sorry for keeping you so long, but Main Street meets Wall Street. We'll talk to you soon. Thanks.